Yeah, so let me just explain. First of all, special drawing rights is from the IMF. It is a window. They call it some people call it a lending window, like we call the Federal Reserve a lending window. The International Monetary Fund. This goes back to me years ago saying that when we have an electronic currency or a global currency, it's going to come out of the IMF. The IMF is desiring desperately to be the currency of the world. This is not a currency. The international SDRs or special drawing rights are not a currency at all. It is the IMF is created this for its member countries. So you asked if China has always had rights. No. I was ranting about this for a very long time, about 4 or 5 years ago, when China's yuan, and I believe it was purely in a political thing, was being considered as a reserve currency. And so they were on trial for 1 year. And then at the end of the year, as I predicted, they would become maybe a reserve currency. They did. China then and now does not meet one qualification to be a reserve currency. So in my opinion, and I got in a lot of trouble for it, but I said that I think Christine Lagarde probably made about $3 million on the deal. Under the table. And, it has to be because there's no reason why China was purely political. Either they were afraid of China or whatever, but they shouldn't have been a reserve currency, but they are. People say, well, China's going to be, we have 5 reserve currencies. There are 5. The US dollar, the euro, the Japanese yen, the British pound, and now the Chinese yuan. The other 4 have been part of this reserve currency, basket of currency, for a lot of years. The idea of special drawing rights is to enable those countries that are a part of this to make sure that they can maintain liquidity. It's very critical that countries be able to maintain liquidity in their currency. Or the other 4 countries, these are the 5 large economies, the other 4 countries, or in this case, the Eurozone not being a country, but 17 countries in the Euro bloc, 27 countries in the Euro altogether, would not get into any problems. So China now is going through some significant problems. They are looking at their high yield bonds. I don't know how often you listen, but I talked about last week about the concerns we ought to have for high yield bonds. And I said, if you have high yield bonds, you might want to be a little concerned right now because there's a good possibility that China could default on these bonds. So here comes the IMF saying, wait a minute, if you default on the bonds, we're in big, big trouble. So we're going to open up our special drawing rights, our SDR window for you to make sure you maintain liquidity. So that's what it's for. All markets and all financial things are based on liquidity, and free flow of cash and liquidity is extremely important for economies to function. So I can't say any more than that. It's very deep. I mean, I'd have to get very deep in the weeds, and I could talk about it for a couple of hours. But so yes, China is getting money, SDR, special drawing rights. They're going to go to that window, and they're going to use that money for liquidity. And yes, they've been doing this for now about 3 years. They've had rights, special drawing rights from the IMF.
Hey, remember to click the subscribe button right here on the screen. And don't forget to hit the notification bell so you'll be notified when new content is added. And more importantly than anything, you don't want to miss all 3 live hours of Financial Issues every day from 9 to noon. And you can watch it on FISM.tv. That's FISM.tv.